I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. We saw some same action yesterday that we saw on Monday, where we're trading up into the open and selling off a bit into the close as traders take some money off the table heading into the holiday weekend. As a reminder, guys, the market shuts at 1 p.m. Eastern today. We're off tomorrow for the July 4th holiday, and then we have skeleton crews on the desk for a full session on Friday. But there's a lot to take a look at in a relatively illiquid market, particularly the headlines that we're seeing out of Europe.
Right, so with all that said, after last week's bounce back from 1560 back to the 50-day, it's made sense to keep some risks down. Yesterday, you started to see on TV all day long the riots in Egypt, which, spiked oil above 100. Then more headlines out of Europe, which we start to see a little bit more frequent about problems in Portugal, the ultimatum in Greece. So you put all that together, with a faulty technical market, it's like, why have excessive risk on? You might as well stay tactical, which is what we're trying to do.
Well, it's going to be really interesting to see how the volatility indexes react today, because we also have some ECB commentary coming out tomorrow while our markets are closed. So it's going to be really important to see how you can tactically trade around this and manage your positions over the next 2.5 days.
I think the best way to do it is, again, using the levels in the charts and where the relative strength and weakness is. And if you look here at the chart of the SPX, you will see that, here's the trend that we've been following since November, okay? When they say to stay with the trend until it breaks because the trend is your friend, well, here you go all the way up until this break right here. Okay, remember that when we sliced through the 50-day, that double bottom, remember that breakout failure on the Fed day when, Bernanke said he's going to, the whole taper talk scenario. So here's your outside day, take some risk off. That's what broke this accelerated trend. Then this more intermediate trend got broken here. And then last week, we held 1560. We bounced back into resistance for window dressing for second quarter performance. So right now, we have like an inside wedge within a bigger wedge. So we're opening right now near this 1601 to 1606 area. I think today's close is going to be important. I think some guys are probably went out net short with yesterday's action, and some a little light. So I think today will be interesting to see if anything can go green, or the weaker scenarios start leading us lower.
Well, this could be also a great opportunity for a lot of the momentum traders, because one consistent complaint we heard in the first 5 months of the year was there's no volatility in the market because we had that uptrend. Now we saw that come back in June, and we're definitely seeing that this week in particular. In our sector spotlight, we're going to take a look at the ag names. Q2 and Q3 are the best times for volatility traders to make some quick money in and out of these names. I love them for 2012. I still like them for 2013 and multiple years beyond. We have a population going from 7 billion to 9 billion. We have to feed everyone. Long term, these make for some nice long positions, but we do have those momentum tradable opportunities like we're seeing right now. If you take a look at the ETF MOO, DBA is another one that's great to trade. It's a little bit more liquid. You can see how the patterns in June and July almost match up to what we saw in 2012. This is a time of year you want to get some quick volatility trades in.
Right, so for those that look to buy on the dip, fundamentally to get it like a tier one, that makes sense. I was looking at some of the weekly charts here to see, seasonality-wise, because, I like to read patterns and look for reasons to own things. And recently, if you look at, the MOO or the AGs, you'll see your high was put in to start the year, lower high, it started to trade versus support here, and it broke lower. So with that said, you take a longer term view and you'll see that, here's the low in the MOO from June, which is 50, which was a double bottom back from last year. If you look back last year, May, June, July, that is when the ags bottomed before a move up into the fall. So for those people looking a little shorter term, or if looking to buy a dip here, you could be a buyer versus the 50. Or if it continues to hold this lower level, perhaps above 5150 gets going a little bit. But ultimately, the ags have showed a lot of relative weakness so far this year. So until that changes, I would keep it pretty small.
Moving along to Mosaic, which is my 2012 pick, and we did well with this one. We traded a lot of straddles around as we got through the volatility in Q2 and Q3. Right now, the name, you might have a good opportunity to get in for the longer term. It's trading only at 12 times, which is cheap relative to the overall market. Looking at names, almost like the airline group has similar valuations. Also, Source tripling his holdings, so there might be a good opportunity here to get it relatively cheap.
So Soros tripled his position in Mosaic?
Yes.
Oh, okay. Well, that's, big money, smart guy. With that said, you look at it technically, you'll see that recently, it did have a bit of a breakout failure in just like the market in May, where it broke out, came right back in, something technically you don't want to see, came back into the base, and this is when it broke below the 200-day moving average, which was, a technical sell signal there. So if you got out of the way here, or you sold here around 58, yes, down low, there is an opportunity. And if you look here, at the longer term trend line, though, in my opinion, it really has to hold around here. Okay, because if it doesn't hold around here, you could see some lower prices, and I don't care of the name who's been doubling and tripling up. That's happened, and that's how people go out of business. For me, as a technical guy, I like to see levels here. And right now, you could be in small, but ultimately, if it doesn't get back above this 54-ish and the market sees more weakness, this could see, something a little bit closer to 50, and maybe even last summer's low around 46. So, I would definitely take it easy there.
Well, it's one of the great advantages that we have being momentum traders and also options traders is that we have the flexibility to play either side of the market, whether it's, a bull market, bear market, or sideways. We have the flexibility focusing on our charts, our patterns, having a little bit of the fundamental knowledge behind us. But as long as you can recognize that and stick to your trading plan, these could be some of the best opportunities that you'll see all year. Another name, Monsanto, was really strong. We're seeing a little bit of weakness here. It could be another great opportunity for a long-term pickup, or we can continue to play those trend lines.
Yes, and you look here, this one, in the ags there are leaders typically, and when the leaders start to break down also, then, you also just want to make sure you're a bit cautious. If you look at Monsanto, it's at the 200-day. So here you go, this was when, it broke this upper area, and then here is when, it came to the 200-day, popped back above it quickly, now it's back below it, and, I would just say there's going to be a heck of a lot of resistance there. If, again, the ags do not get their bid yet, you could see probably a move in Monsanto down a little bit closer to 92, as there is a void here. So, yesterday it did turn up. You want to use a daily chart or your daily candlestick. You did get one where it broke below the 200-day, back above the 200-day. So I think today will be interesting. If you want to trade very short term, trade versus yesterday's low, and if you could start to get back above the 200-day, maybe it was more of a seller's trap versus real selling.
All right, let's wrap it up with CF Industries. We're going to focus on the key 196 level, which is we're going to use our Fibonacci retracement levels to figure out a trading plan for this one.
Yes, and this one too, like Monsanto, every time I've tried to turn to the ags, I'm like, okay, Monsanto's a leader, CF's a leader, then I look to some others, and this one has just been slowly getting beaten up, like the rest of the group. So with that said, technically, you look here, you can see, I guess you could say this was a breakout failure, and then you had this downtrend, and it came back, and it's below the 200-day. It's trying to put a double bottom in here versus the April 18th area, but overall, to me, this still looks sort of like an avoid. Okay, I guess if this level were to hold, if this 169-ish were to hold, then maybe you get some kind of bounce back. But if it doesn't bounce back much and reclaim any of these, this level could break, and then I would wait for something, very compelling, some type of candle that really gets you back involved. Otherwise, you're just kind of trying to fundamentally pick areas.
All right, we're going to take a quick commercial break, and when we come back, we dive into the trenches.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Welcome back to the morning call. We dive into the trenches and we take a look at some tech names. Let's kick it off with Apple, everyone's favorite name to trade over at T3. We saw a nice 3-day move, and we're going to be looking at some constructive levels for a possible retest here.
Yes, if you follow technicals, especially with this one, and you got out of the way when it technically broke down or played some bounces when there were a few of them, you were in a good position last week, not underwater, to take advantage of a reversal pattern. Okay, when things are in a downtrend or things are under pressure, you try and stay out of the way until you see something. So it was actually funny, Jill. I was on my way out to the Hamptons on Friday, and my whole Twitter feed is like, red dog, we're getting a red dog reversal in Apple. Are you there? I'm like, no, I'm on a train going out to the Hamptons, but I'm still long silver. They're like, well, get involved. And I'm like, well, listen, you learned the tactic. We taught you how to fish so you could throw your damn, rod in the water. You don't need me to do it. So anyway, with that said, look what that pattern led to. That's why people get excited about it. Here's the move in Apple from 700 all the way down. Let's not rehash it. Then finally, you did get what some would say is a double bottom, okay, short term. So if you weren't in it, here's the bottom there, 385. Here's your red dog reversal when it broke below 393. Put a low in at 388, came back above it. That was your entry. It also did it in a day when the market was weaker, so it showed relative strength. And then what was important about it also is then you had a gap up where for the first time, look at that, a gap held in Apple. It gapped up, held 401, so it didn't just fill it. And then yesterday you had your day 3 follow through. So with that being said, I would not be chasing Apple right around here, but it's down a few bucks. Maybe they take a positive if they could trade it through yesterday's high of 421.63. There is a bigger level up at 433. So overall, I think let's see if commitment stays in Apple. I think that this 3-day move sparked enough interest to take it from the C list, which it's been on for many people, back to maybe the B to B plus list, at least for some action.
That's really great to hear that your traders are identifying levels on their own, because that's one of the key things that we try and teach all the time. Don't just listen to us when to get in and when to get out, but to really learn how to do this on your own. That's the only way you're going to be successful doing this. That's great to hear.
We love to throw a fish in the boat.
Right.
That's easy, but they're not always jumping from the water in the boat. You got to be able to bait the hook and put it down there and do it yourself.
That's really great to hear. Let's move along to LinkedIn. This has been one of the outperformers in the social media group. It's under a little bit of pressure this week, and we've been following a doji pattern on this particular name.
Yes, well, this one, rallied last week into the end of the quarter and then tried to break above resistance like some of the tech names. Some of the tech names have been acting better. And then yesterday I came in pretty long. I was like 6 longs, 1 short. I was excited about some potential breakout patterns, but then a lot of them didn't have enough power and kind of failed, which got me into a little bit more risk-off mode. So if you look here at LinkedIn, not the end of the world that you had a little bit of a doji through this resistance, because look where it came from. It's still above all the moving averages. It's still basing, for almost 5 months now. This was last quarter's earnings, which just wasn't enough after a huge move. And now there's still a lot of, accumulation here. So overall, still looks like it's in the game. You just have to, time it depending on your time frame. And ultimately today, it'll probably be red with the market. Maybe it goes green and continues to show some leadership. So I would stay the course there and look for those tactical entries.
Moving along to Amazon, this one triggered our buy list yesterday and hit fresh all-time highs. So what we're looking for is, can it continue on that momentum, or are we going to look for a little bit of a pullback here?
I always have trouble trading Amazon.
Yes.
I've never really understood the valuation, but I'm like, what? Relative strength here. I'm going to try. Posted the chart. And, yesterday was one of the days which reminded me why I hate or dislike, because hate's a strong word, dislike trading Amazon, because it's very slippery, it's very loose. And
it's hard for people to grasp the valuation and the margins on it as well, to justify the price where it's trading at. So I understand that.
And even just the way it trades. Like I bought, like if you look at the chart here, the level was this 283, to 284 and change. So it went through that level by 50 cents and failed. Then it went through later, went as high as 286.53, came back in. So for traders who like momentum for a clean breakout, it was definitely very annoying yesterday. So that actually got me out of it. I came in long Amazon. I tried to add here. Didn't have strength after being up a few days, and now today it's opening a little bit lower. So maybe today down 2 3/4. You try and buy some for a negative to positive move. It's still above all the moving averages. Like this was a clean trade right here. When it broke above 272, it went up and went and gave you a nice 2-day move. Here it's like inching, so it makes it a little harder. Ultimately though, it's near 52-week highs. The market's come in. It's showing a lot of strength here. So maybe for someone just sitting in it, it's easier. But for me as a trader, it's not the easiest thing to approach.
Well, moving along to Netflix, this one had a really strong move on Monday, and we saw a little bit of that given back yesterday.
Right, and this tends to do that. So today, with it down a little bit, I'm going to look to see if it can go negative to positive. Sometimes Netflix likes to be up on down days. I don't know, maybe Carl pushes the buy button then. But anyway, you look at the chart here, ultimately not much traction, but what could you say positively here? It's holding the gap still. You had a little relative weakness on Friday, then you had this wide range bar, on Monday with the news, another content piece, then yesterday a bit of an inside day. So, yesterday's low is 218. For this to stay interesting, I think it has to stay above 218. Maybe it goes from negative to positive for active traders for opportunity day. If it doesn't and comes right back into this area, there's just going to be guys that just leave it alone because it's just too damn choppy.
All right, let's wrap it up with Google. This saw some relative weakness as well this week, and we're going to be taking a look at that key 50 DMA level around the 870-ish range.
Yeah, this one too, it's very close to historic highs, but lately it's a very lethargic trade. Intraday action is important for traders, and lately also with the overall market, a stock will go have a big spirited move and then just drift lower, and if you have bad prices and you don't have a longer term thesis, it's been hard to hold. And if you look at the chart here, Google looks really good, right? Lots of $1,000 price targets, but overall the action intraday has been very. Look at these. Look at these tails. Push up, closing the lows. Open lower, closing the highs. Doji, weakness yesterday. So anyway, here is what you were talking about, Jill. Here's that 50-day moving average, and it's still holding in there. So as long as it stays above the 50-day moving average, if you're a swing trader, stay with it as an active trader. Take your trades. We had a nice trade right here when it broke above that 880. You had a nice trade here when it broke this descending channel. But recently, this has been pretty much a choppy mess. So watch that 50-day, and then maybe we'll take a closer look coming close to earnings time.
All right, let's wrap it up with some quick hits for quick cash. We're going to kick it off with Tesla, and what a story this stock has been. I mean, they're calling this guy, the next Steve Jobs.
And I've watched them, I've been following it, and I've been telling my traders to get used to this stock, get comfortable with it. It trades in patterns. It has the potential to really be $140 to I think $160 stock. It's in a new innovative industry that's getting adopted. He himself is a great presenter, but more importantly, technically, it's made sense. And this week, this was one of my favorite trades of the week. You look at it, and the reason why is because during the market correction, what did it do? It held in there. It's been following the 8 and 21-day moving average. We talked about this trend line. Look at this trend line, holding in. One day when the market really fell apart, it tried to and it held in there. So here was a buy point, and for me, my trigger on the price point sheet was 110.25. That's buy area number one. Buy area number two is when it takes out the year-to-date highs of 1490. So what happened? It closed through there. So the good book says take some home long. Then yesterday, it gapped up, went to as high as 121.89. I got flat Tesla into that. And then, you have a bit of a doji, which means it needs to rest after a really nice move from sub 100. So today, see how it handles yesterday's low of 115.50. If it holds it, stays pent up, I'm sure we'll get another nice flag pattern to then trade from. If it trades below yesterday's low, perhaps look at year-to-date high, which sometimes serves as support, or the 8-day moving average, which it's been holding, during the course of the past week or so.
All right, let's move along to GLD, the gold ETF, and gold bugs have had a really tough time over the course of the past couple of months. But we did see a little bit of a move over the past 2 days, and in the miners as well.
Yes, well, finally there was enough blood on the street because, gold bugs, unfortunately, they have really big opinions.
Right.
Gold has to go up because of this, gold has to go up because of that. They don't look at the technical charts, and the technical charts have been saying lower, lower,
right.
lower.
Well, I think a big misconception that a lot of traders have, and retail investors in particular, is that they've been trading GLD, the miners, even the underlying, like it's a stock itself, not respecting the patterns and understanding that there's more to it than just that bullish theory that everyone has to be involved, because at the end of the day, the underlying is not a stock. It doesn't work like that. So that's why you really have to respect the patterns that you see with, the GDX, the miners, the GLD, the ETF, and take your cues from there. Yeah,
well, look right here. Look at the chart of GLD. It fully told the story. Look at this tight pennant. Okay, right here, you didn't know whether it would break higher or break lower, and what did it do? It broke lower. That was your sell signal. Then look, Jill, here at the support going across for what, a year and a half. 148.50, I don't care what you were thinking. Once it broke there, you had to get out of the way. And if you got out of the way here at 148, you saved yourself a lot of pain. Then again at 130, another inflection point. So finally last Thursday, when I think everyone in the world capitulated their shares, I said, you know what, now it's worth a look in this 114 to 118 area or something. So anyway, here was a red dog reversal. 115.65 went below it on Friday, closed through it, engulfed the prior day, filled the gap. Now you have another trend line here. I think this trade can continue. If it gets above 121.95, I think we at least see the 21-day and maybe fill that gap. But ultimately, I think that this is an intermediate trade that you could trim and trail back to at least 125-ish.
All right, let's move along to the treasuries, the TBT. This has been another really active asset class. Yes,
and for me, it's hurting a little bit this morning because, I put out a note saying, sell it into strength a week or so ago above 75, and then I've been trying to target a spot to buy the pullback. So with that said, look at the chart here, look at this little bar. I did tweet yesterday that I got long TBT, which I did. Because look, okay, here was, your last part of that breakout move. If you sold it into the strength above here, you had the luxury to buy it back. So with the headlines around the world, what's going on here, there's a little flight to quality. So, it's pushing, the yields down. So that means that this is going to get some pressure. So here is the 21-day moving average, which it's been above, okay, during the course of this entire move, since back in, what is this? This is May 9th. So I'm not going to just get, if it goes below 71.61, doesn't reclaim it, I'll probably get stopped out. But if it comes in here, I'm going to be a buyer a little bit into the 21-day, maybe below. I'd love to see some kind of flash through it and then finally close up, maybe into people not, the jobs number being strong, this and that. But ultimately, this is a spot to put a feeler on, which is what I have. And then today, if it goes positive, I'll add to it. If it closes on the dead lows, I'll probably just get out of the way.
All right, and let's wrap it up with YHOO.
YHOO. This one made an acquisition after the close. Some people like it, some people don't. I was long it yesterday. Got it stopped out just because I was playing it for a trade. Ultimately, this was in my 2013 thesis that it can get to 24 to 26. It went a heck of a lot higher than that. Went to as high as 27. Then it broke two trend lines, one right here and one right there. So what did it do? Just like the market, came back, retested it, thought maybe it could get going again, and it closed on the lows here. So I would say YHOO's an avoid. Next spot I would look at it is somewhere right around this 24 area. If it holds there, maybe you could reposition back.
All right, so we still have a lot to look at even though we have a shortened holiday week. And on that note, everyone have a safe and happy 4th. Catch Scott as he wraps up the charts for us at The Street on Real Money, Options, Profits, and of course on T3Live.com.